Now, offshore investors seem to be betting on the local bond market. According to data from the JSE, last week, foreigners sold 7.1 billion rand worth of domestic stocks, but inflows continued in the bond market, with investors picking up bonds worth 2.3 billion rand. Now, joining me to take us through the action that's been playing out is RMB's institutional sales specialist, Deon Kohlmeyer. Deon, thanks so much for your time today. Now, we've had renewed confidence boosting bonds after the election. Has it been sustainable? Are we seeing that strength filtering through to the third quarter?
Afternoon. Yeah, it is a good news story. I think it helps if we take a little bit of a backward look at where we come from.
Mm-hmm.
I mean, pre-COVID, we were in 2019. One of the very liquid long bonds that we have is the R2048, which obviously matures in 24 years' time. So that's a good sort of bellwether for how everyone is feeling about the bond market in terms of how that trades. And that was sitting at around about 10.5% at the time. Obviously, with COVID hitting us in 2020 and subsequent to that, we had the Lady R incident. We had a lot of, geopolitical stuff. We had the election recently, etc. That's pushed that 2048 up to around about the 13% level a few times.
Mm-hmm.
Now, there's obviously a very big difference, 10.5 to 13%. And up until the election, that's where we sort of were trading. Now, obviously, we had a very good result for the market in terms of the election, peaceful, not too much drama around that, and obviously the good news of the political solution in terms of the GNU after that. And subsequent to that, we've actually gone down to about 11.5%, and today even we've gone down to about 11.20. So you can sort of, if you picture that as a graph, we have recovered quite a bit.
Mm-hmm.
The rand helping again as it's close to 18 to the dollar this afternoon. So generally, it is a good story overall.
So basically, we are seeing a lot of global factors and a lot of local factors just impacting movement we are seeing within the bond market. Now, when you read a lot of these headlines, Deon, you'll notice that we've been seeing foreign investors seeming a bit more positive on local bonds and kind of snapping them up. What's the reason behind that? What's been fueling that sentiment in particular? Is it just what we've been seeing playing out, let's say, at the moment when you talk about what we've seen in terms of sentiment with the local election?
Sure, a couple of things have changed. So obviously we have had the election, the GNU, which was an excellent political result, and the markets obviously like that a lot, especially the offshore guys. But besides that, we have had a changing of the guard at National Treasury, with Duncan Peterson coming in there as DG. Very market friendly. The offshore guys know him and like him. There's a lot of talk around fiscal discipline. We had the Jafekra positive effect. That's 150 billion rand over this year, 100, and then 25 each for the next few years. So that's helped our fiscal position immensely. We're looking at primary budget surpluses again. So, the fiscal position has improved a lot, and these are things that offshore guys look at. There is some talk that the rating agencies may even look to upgrade us at a stage again, instead of going the other way like we have been.
Deon, how do local bonds fare against their emerging market peers? I mean, on Monday, we had the rand top the list, being the top emerging market currency for the week. How do local bonds fare up against their peers?
Yes, indeed, and that speaks to the rally, from those heady heights of 13% that we come from to the levels that we are at now. As you correctly say, the rand, I think, has had a positive 1.5% return this year versus the dollar, which does put it right at the top of the pops. When you compare that to what's happened to a lot of other emerging market guys, Mexico, Brazil, Turkey, Argentina especially, they're down 10 to 14% on their currencies for this year. So, a lot of nervousness in our emerging market peer group. And, with all the positive factors that we've gone through, we are again one of the top destinations for foreigners looking for yield. And we still have high yields compared to a lot of these other places. I mean, Mexico trades in the sort of 10.5% range. So, we are looking more attractive than they are. And especially given that our currency is so stable and strengthening.
Deon, before I let you go, would you say that we're past the worst when it comes to, the downbeat news, considering the prints we've seen this week, the US prints in particular on inflation, where we are seeing inflation easing, which then bodes well for, those rate cut bets from the Fed?
Definitely. I mean, US CPI came in a little bit softer than expected. So, that speaks to the narrative of inflation seems to be going the right way, not only in the US, but obviously in SA as well. Rate cuts are coming. Our house view is they start in September, but the market is actually looking for a lot more cuts and a lot quicker cuts than that. So, if you look at where your FRA market is pricing, they're looking for 100 points of cuts potentially over the next 3 meetings. So the market is pricing in a lot of good news on the rate cut front as well. And that will help, interest rate markets in general and the bond market as well.
Deon, thanks so much for your time and just taking us through the action playing out in the bond market. That was RMB's institutional sales specialist, Deon Kohlmeyer.